We are back, and it's time to check in with Elon Moy, who has been bringing us the action all day from D.C. Elon, I know you had every angle covered. I know you're inexhaustible. What's the latest? And is the drama building?
Well, we are in the final leg, Jim, of today's marathon debate in the House over the articles of impeachment against President Trump. Both sides coming down now to their closing arguments. Republicans that this is all just sour grapes left over from 2016. Democrats say that no one, not even the president, is above the law.
The risk is real. Our democracy is at peril. But we are not without a remedy prescribed by the founders for just these circumstances: impeachment. The only question is, will we use it?
Clearly, Jim, the answer is yes, and the House is on track to begin voting on the articles of impeachment around 7:30 to 8 p.m. Eastern. After that, the president will become just the third in history to be impeached by the House, though this time that vote will be largely along party lines, Jim.
Elon Moy, thank you so much. You are doing a fantastic job, and I really appreciate you keeping us updated. Good to see you.
Thank you.
All right, now, looking at the action today, it might seem like this market has a very hard time incorporating what we just talked about, the impeachment of a sitting president. Now, I'm sure many of you are astonished, really kind of blown away, I bet, by the cavalier way the averages have plowed higher, despite the horrific headlines.
The House of Pain.
And the level of partisan rancor in Washington, it seems reminiscent of when they were trying to get through that compromise of 1850 before the Civil War. But I got to tell you, this market's actually doing a great job of reacting to the impeachment process. Why? Because while what's happening today is momentous, it's just not momentous to Wall Street. Remember, 21 years ago, the Republicans in Congress impeached President Clinton. I remember that being a much more uncertain time because Nixon had been forced to resign within living memory and because the opposition controlled both houses of Congress. The GOP had 55 seats, and they only needed 12 Democratic defectors to remove Clinton from office. But the Democrats, no, they didn't break ranks. While a few Republicans did, the actual vote was 50-50. President Clinton, he was acquitted. I'm betting a Trump impeachment would play out pretty much the same way. And so is Wall Street. That's why the market could roar right into the impeachment inquiry. If anything, regardless of how you feel about the merits of the actual investigation, how you feel, Trump is in much better shape than Clinton because his party controls the Senate. And again, this probably doesn't need to be said, but I'll make it explicit anyway. You need a two-thirds supermajority in the Senate to remove a president from office. That means something like 20 Republican senators would have to switch sides. And right now, frankly, it seems unimaginable to me. I'd be surprised if there are more than one or two Republicans who vote to convict. At the end of the day, impeachment is a political process. And when you look at the political dynamics, it's pretty obvious Trump will be acquitted. I'm not saying it's a nothing burger. It's an impeachment trial, for heaven's sake. Only the third time in history, as Elon just mentioned. But the outcome is a bit of a foregone conclusion, people. And that's what the stock market, that's what it cares about. It cares about certainty. Something can be momentous and newsworthy without being, important to the market. I've said over and over that as far as Wall Street's concerned, impeachment is a sideshow. It's just not that relevant. You might want it to be, but it's not. When the House launched its impeachment inquiry in late September, I pointed out that you should use any Washington-driven weakness as a buying opportunity, because that's what worked during the Clinton impeachment process. The averages got hammered when the Judiciary Committee launched its probe into Bill Clinton. That turned out to be a fabulous buying opportunity. Between the Judiciary Committee's recommendation and the House's full vote to impeach about 10 weeks later, the Dow surged 16%, S&P roared 21%, NASDAQ skyrocketed 39%, although I should point out that we got a major boost from the Fed in October of 1998. Remember, even then, the Fed. I could bore you stiff with that Fed, couldn't I? Anyway, the lesson here is pretty straightforward. If you let the impeachment inquiry scare you out of the market in 1998, let's say you just got frightened, okay? Sell. You miss some huge gains as the stock market just kept on trucking. So far, 2019 has played out the same way, even if the gains aren't quite as extreme this time around. If you sold everything on September 24th when Nancy Pelosi, the Speaker, announced her support for an impeachment inquiry, well, I got the kick me sign for you. That's right, because you're kicking yourself now. Dow ran up 5.3%, S&P up 7.6%, NASDAQ's run more than 10%. Well, there we go. But now impeachment moves into its next phase, the trial in the Senate. So let's get that Clinton playbook out again. What does it tell us? Well, if you measure from the day the House voted to impeach kind of like this vote that we're waiting for. That's right. The day they voted to impeach Clinton, let's take a look at this. To the conclusion of the Senate trial, less than 2 months later, the Dow actually rallied 3.2%. S&P gained 2.2%. NASDAQ zoomed 8.6%. That's right. From this day. We take it from this day. Buying opportunity. All told, from the beginning of the impeachment inquiry through the Senate's vote to acquit, the averages gave you an incredible run. The Dow surged 21%. S&P was up 26%. The NASDAQ was up 56%. So let's just say the buyers have history on their side. In fact, after we got the Clinton impeachment over with the February of 1999, well, you know what? We had a glorious year for the stock market. Really fabulous. Kind of left out the right shoulder there. Whoa. The Dow finished up 25% for 1999. S&P gained 19%. NASDAQ rocketed 85%. Again, that was the fabled dot bomb. Impeachment was irrelevant. You had to use any weakness to buy, and then to buy, and then to buy. Beyond the history, though, there's an even more important reason why it doesn't matter. While the impeachment headlines might dominate the front page, they don't make it to the business section. Why should they? Back at my old hedge fund. Well, I like this one. Back at my old hedge fund. Whenever someone would bring up something ripped from the headlines that sounded daunting but had nothing to do with business, I'd always say, what the heck does that matter to the price-to-earnings ratio of Bristol-Myers? 20 years later, the dictum still rings true. Bristol-Myers is a quintessential blue-chip stock. I really like it here. That guy, Dr. Caforio, is doing a great job. And its valuation is determined by what you're willing to pay for its future earnings stream. The Clinton impeachment had zero impact on the future earnings stream. The Trump impeachment will play out the same way. Now, the difficulty for you is that there's always some gas bag who's willing to come on air and argue that this kind of political wrangling should play a role, like it's akin to inflation or GDP growth or federal funds rate. But the simple fact is, it's not. There's no reason stocks should go down just because the president gets some real bad publicity. Whatever you think of the Ukraine thing, right? We got a pretty strong economy going here, low interest rates. Nothing that's happening in Washington right now is going to change that. So forgive me if I emphasize it again, but the impeachment and trial of President Trump has nothing to do with the price-to-earnings ratio of Bristol-Myers or any other stock for that matter. Finally, you have the argument I've been coming back to for ages. You have to own stocks because what the heck else are you supposed to own? What the heck else are you supposed to do with your money? Are you going to call your broker and say, you know what, here's what I want to do. I want to swap out of all my stocks sell, and go into bonds, which yield almost nothing. Because President Trump won't be convicted in the Senate? Doesn't sound that rational to me. Now, if you stick with me, I'm going to contrast what roared back during the Clinton impeachment with the stocks that could lead us higher now. Because you know my mantra, there's always a bull market somewhere. And the bottom line is right now there are a ton of bull markets. That's right. It may not be classy, but I'm here to help you profit from these impeachment proceedings. Because you know what? The show isn't mad politics. It's mad money. And on Mad Money, we never stop hunting for the next bull market for you. Stick right there.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.